Welcome back to the channel. If you're new here, we help business owners like you keep more of what you earn. Today, we're diving deep into 2025 year-end tax planning. First, a quick check-in. This video is for all you cash basis taxpayers out there. That means you count income when you get paid and expenses when you pay them. If you're on the accrual method, this one isn't for you, but don't worry. I have another video covering accrual strategies just for you. We've got 4 major strategies to cover, so let's jump right into the biggest one. Strategy number 1 is the asset purchase strategy. For the last few years, we've watched bonus depreciation slowly die a painful death, dropping from 80% down to 60%. Well, surprise! New legislation for 2025 has brought back 100% bonus depreciation for qualified property placed in service after January 19, 2025. Why does this matter? It means if you buy a piece of equipment, a vehicle over 6,000 pounds, or even new office furniture and start using it before December 31st, you can write off the entire cost this year. You don't have to spread it out over several years. And forget about Section 179, the limit for 2025, has been bumped up to a massive $2.5 million. So here's the play. If you've been sitting on cash and need to upgrade your fleet, buy that $50,000 machine or get new servers. Now is the time to do it. But watch out for the trap. Simply signing a contract in December and paying in January doesn't count. You must place the asset in service before midnight on New Year's Eve. Pro tip: putting it on a credit card on December 31st does count for tax purposes. Strategy 2 is the classic cash basis superpower: income deferral. Since you pay taxes on money you receive, your goal right now is to, theoretically, stop receiving money. If you have clients who owe you, or you're about to send out huge invoices for work you did in December, ask yourself, do I really need this cash in my bank account before January 1st? You can do this by delaying your invoicing. If you send an invoice on December 28th, your client might pay you on the 30th, making it 2025 income. But if you wait and send that same invoice on January 1st, that income becomes taxable in 2026. You've just given yourself a year-long, interest-free loan from the IRS. A quick warning though, if a client hands you a check on December 30th, you can't just forget to deposit it until January. That's called constructive receipt, and the IRS really hates it. If the money is available to you, it's taxable. This strategy only works if you delay the billing itself. Next up, let's talk about accelerating your expenses. You already know you can pay bills early, but are you familiar with the 12-month rule? IRS regulations let cash basis taxpayers deduct prepaid expenses this year, as long as the benefit doesn't extend beyond 12 months or the end of the next tax year. So, what should you prepay right now? Think about your rent paid January or even February's office right now. What about insurance? If your business policy renews early next year, pay the full premium in December to get the full deduction now. Software subscriptions are another great one. Switch from monthly to annual billing and pay for it today. And don't forget to stock up on supplies like toner, paper, and shipping materials. Remember, if you charge these expenses to a business credit card on December 31st, it counts as paid in 2025. Even if you don't pay off the card until February. Now for some quick updates from the 2025 legislation. First, the QBI deduction. There was a lot of panic that the 20% pass-through deduction was expiring. Great news, the new bill has made it permanent. This means you don't need to panic and convert to a C Corp. S Corps and sole proprietorships are safe. Second, there's a new overtime tax break for employees. As a business owner, you don't get a credit for this, but you need to be prepared. Your payroll provider must track premium overtime pay separately. Your employees will need this data to claim their deduction. Be a hero and get your payroll sorted now so you aren't scrambling in January. Finally, the retirement sprint. For a solo 401k, you generally need the plan documents signed by December 31st to make it count for 2025. You can fund it later, but the plan has to exist. For a SEP IRA, you have more time until your tax filing deadline, including extensions, to set it up and fund it. Contribution limits are higher than ever, and a big profit-sharing contribution is often the single biggest deduction you can manufacture out of thin air. Here's your checklist for this week. First, review your profit and loss statement. Are you showing a huge profit? Second, call your CPA and ask them if you should buy that truck or machine now with 100% bonus depreciation back. Third, review your invoices and delay what you can. And fourth, prepay your insurance, rent, and subscriptions. The 2025 tax landscape is looking really good for small businesses. Don't let this opportunity slip by. If you found this helpful, hit that like button. It really helps the channel out. Now go save some money. I'll see you in the next one.